Hi, my name is Chester Johnson. I'm the co-founder of the Stockteamup app and Stockteamup.com. And today my guest is Gene Inoku. He is a day trader that I know here in Indianapolis. And before the pandemic, we would meet up and talk day trading and options and everything. Gene, thank you for joining me today.
Hey, thank you. Thanks. Sorry, let's start over. Here we are again.
Okay.
Chester, thank you for inviting me. It's a pleasure.
Uh, I'm really excited to talk to you because uh, we're really trying to push long-term investing with our the people that use Stockteamup, which is now about 8,000 people. And if someone wants to do day trading, I want to encourage them. But I'm so happy that you're on because I want you to kind of give how day trading really works during the day, the stress, the excitement, just the feel of being a day trader. I think that might help people understand what they're going to get themselves into if they if they decide to be a day
Sure,
trader.
sure. So I want to clear some things out first because most people when they hear day trading, they think about quick money and easy thing. It's like they think about it as an easy way to make money. Um, which it is not because clearly obviously it's really hard, which is the reason why most people fail when they try to day trade. But yes, day trading comes with a lot of emotions. I would say it's 90% managing your emotions and 90% just sticking to your rules because as you know, market moves a lot during the day, and we usually get the most movement in the market right at the opening, so around 9:30, between 9:30 and 11:30. That's when most day traders are more active. Um,
So Gene, I know you're very technically savvy when it comes to day trading, but in terms of the emotions, tell us about a trade recently that you did that was just emotionally charged because of the roller coaster ride you were on.
Trading. I'm so sorry. I take so many trades during the day that I tend to forget. Um, what was I trading again? Yeah, I'm trying to
You
remember.
trade that much. There you go.
I do take a lot of trades. So on average, sometimes I find myself taking like let's say 20 to 25 trades per day.
Yeah.
Yes, which I consider a lot, like in and out, So I've had a couple challenging trades.
Maybe I should ask the question differently because when we were talking about trading last time, the pandemic was just setting in and the market was crashing. So it was a little bit more emotionally charged each day.
Yes, back then the volatility was very, very high, and that brought a lot of opportunity to the market. Actually, March was one of my best months. Actually, March was my best month for this year,
Why
because
was
of the
that?
volatility.
Yeah.
Yeah, so I remember we're waking up to the market being down, being down 500 points and stuff like that. So that would bring a lot of volatility to the market. And I remember having 1,000 points moved in the market per day. So that was a lot of opportunity for day traders, obviously. Um, and it didn't require much skills actually to take advantage of those moves because the market was moving so much, up and down. So even the very little technical analysis skills, could be useful in that market, in that environment.
Hmm. So nowadays with the market, except for yesterday, by the way, at time of recording, the market just crashed, 4%, and Tesla and Apple after splitting fell pretty badly. So it's a
Yes.
little more volatile, but for the most part, the last few months with the markets going up, uh, what has been your strategy and what have you been trading during the day?
So yes, that's a very good question because I've had a lot of people reach out to me and asking me, what should they trade since the market is going up. So yes, it's a good thing that the market is going up, but not all the stocks are going up at the same time in the market. So I try to stick to the very known stocks, the FANG, Facebook, Apple, Netflix and Google and Amazon, obviously. So I've tried to stick to those big caps because those are the ones that raise the market up. So that's what I've been trading mostly lately.
Awesome. When you trade during the day, do you set a goal for yourself, or do you just keep trading until the market closes?
So I try to set a goal for myself because there's this thing in day trading that we're very well aware of, which is over trading. So you cannot be right all the time, right? So I try to set a goal so that as soon as I reach my goal, I try to take off and not overstay my welcome in the market because as easy as it is to make money, it's also easy to lose it. So try not to overstay my welcome.
You said that like around midday is like when day traders are typically active. Is that
No,
correct?
no. So day traders are typically active right at the open. So around between 9:30 and 11:30. That's where we get the most out of the market.
Got it. And then like like for yourself, do you kind of take a break around noon and the early afternoon, or what do you do when it gets kind of quiet with the market?
So to be specific, what I usually do is when I day trade, I'll be day trading between 9:30 and 11:30 usually, and then around 9:45 is when I like to open my swing trades for the day if I'm watching something that which is that meets my requirements. That's the time where I would like to open my swing trades, and then after 11:30, when I'm done day trading, I'll take off from the market, and then I'll come back maybe around 3:30 to see where things are and if there's any opportunities for another swing trade or not.
Oh, awesome. Now, what kind of instruments do you use? Are you using options or pure stock positions? What are you doing during the day?
So I'd say 95% of my investments are options. Yes. I like options for the leverage that it offers.
Absolutely. Are you fully bullish on all your option spreads? Are you even doing option spreads? What exactly like what kind of strategy are you using?
Yeah, so as far as right now, I'm fully bullish on most of my things. Yes.
Got it.
And I mostly buy calls instead of doing spread. I do spread sometimes, but not very often.
Got it. When like what kind of situation would you decide to do an option spread? Which for the audience that's watching, an option spread is just when you do two options and you have the second option which will minimize the amount of downside loss you can have for the most part. There's different kinds, but for the most part, that's what it's for. So when will you use an option spread?
An option spread. So I'll use an option spread in a situation where I cannot really time the move that I'm expecting, or in a situation where the move that I'm expecting is it might take longer than I would like. In that situation, I would like to get a spread because then I can take advantage of the time decay and stuff like that. At least I don't get killed, with the time decay when I buy the option versus doing the spread.
Yeah, yeah. So yesterday, what the markets yesterday was September 3rd. This is probably going to be released a little later than it's probably going to be released a few weeks after this. But yesterday, the market's collapsing all day. I think it ended at a 4%, 5% loss on the
Yeah.
NASDAQ. What were you doing during all of that?
So funny story. Okay, I now remember the stock that I was trading that gave me some emotional roller coaster. It was Nvidia. So I was trading Nvidia yesterday, and I was very bullish in the morning, because Nvidia has been in uptrend for a while now. And somewhere around I think it was 10 a.m. I looked at my multi time frame charts, and I suddenly turned bearish. So I had to bail out of my bullish positions and turn them into bearish positions, which ended up working for me during the day as a day trade. And then when I looked at my 2 hours chart, my 2 hours time frame chart, it gave me a longer time frame bearish position that an opportunity that I could open. So that's what I ended up doing yesterday after I was done day trading. Ended up opening a bearish position on Nvidia for think I bought a call for 2 weeks expiration, and it ended up working overnight. So I ended up closing the trades today, this morning, yeah, as the market was down.
Before I interrupted you in the middle of your trading.
Right? No, that's fine. I was just managing trades today. I wasn't really opening any new positions because um, I don't think that this sell-off is any signal for a bear market. I think it's a regular sell-off. So I try to be nimble on my short positions here. I don't want to get caught in the rebound.
Yes. Yeah, I fully realize. I think your point is very sound. The last probably 5 videos, like every video I say, man, the market's super overvalued, but it's probably the momentum's too strong, and I think
Right,
I think you're completely. I wouldn't I wouldn't short the market long term right now either. I think that's that's a good idea.
right. I try to be very nimble at this point because that's why, as of right now, most of my trades are day trade because eh, it's market is so overvalued. As you know, I'm very bullish, but market is so overvalued that I don't see myself putting the risk on at this moment and go long term bullish on something right now. So I'd rather day trade and try to take advantage of the intraday moves.
Yeah. By coincidence, on Wednesday, that was September 2nd, we helped some students come into the Stock Bossip app. We got about 50 students coming in, and kind of in between everyone trying to just log in, I said, "Hey, does anyone own Tesla and Apple?" And got a few hand raises, and I said, "That's great. Just note that Wall Street is a momentum-driven um, entity, and if
Right.
things turn bad on you, it's going to turn bad really fast." And the next day, things fell like 5%. So
Exactly. So a few of my friends that I mentor too, they've been reaching out to me lately, asking me, "Hey, we've had Tesla and Apple, recent split. So shares are cheap now. Should we go ahead and buy some?" I was like, yes, cheap is good, but cheap can get cheaper too. So I was telling them to wait, because one of my mentor told me that usually 3 days after a split, excuse me, 3 days after a split is when the stock reveals, its real trend. So that's what I was telling my people. I was telling my people to wait instead of trying to buy because they thought oh yeah, we got a split, so now shares are cheaper. Yes, they're cheaper, but you don't know where the stock wants to go yet. So I was telling people to wait 3 days after the split to see what would happen, and 3 days after the split. So I think it was Wednesday, right? And then starting Wednesday, that's when the market started to crash. I was like, yeah. As we said, you could gain three times your money, but at the same time, you could lose it in a week or two, you know, based on some bad news or something happening in the market. So
yeah. So for you, that goes back to your trading. Do you, during the day, are you monitoring news and are you using that for your decision making on trades?
I am because as a day trader, um, news in the market could change the situation very fast. I remember one day, I think I was trading Apple to the long side, and then I think we had Chairman Paul speaking that day, and as soon as he was done delivering his speech, um, my position went from being up 20% to down 40% in less than 5 minutes. Yes, that was
Wow.
very that was very that was very bad emotionally.
Yeah.
So
Yeah. 5 minutes
definitely,
to lose
yeah,
60%. Wow. Or
exactly.
60% change. Wow.
Yes, exactly. So news are very important. As a day trader, you have to keep an eye on news, especially when trading options. You have to
Yeah.
keep an eye on news because they can change very fast.
Just to be clear, just to make sure I heard you correctly, you heard news from the Federal Reserve Chairman, correct?
Yes,
Yeah.
yes.
Yeah. Got it. Yeah, that's a tough one because that's going to affect the entire market. The Federal Reserve determines interest rates indirectly through the buying and selling of bonds. So what they do will signal to the market certain things they want to do, and that's news that instantaneously needs to be put into the markets. So prices will move accordingly. So Yeah,
exactly.
yeah,
And it's really hard to try to predict how the market will react to the news because sometimes the news could be very positive and the market will just sell off for whatever reason or you know vice versa. So
yeah, absolutely. I'm just as easily you could have made another 40% that day on an option.
exactly.
Yeah.
I wish that was the case, but
To be clear to people watching, when Gene says he lost 60% in a swing, Apple stock didn't fall 60%. But if Apple falls maybe 4%, then Gene's option will lose significantly more than 4%. Is that a fair way of putting it?
yes, that's very fair. And I'd like to add to that, and I would like to say that so for me, when I trade options, I have a very limited amount in my account that I allocate to those option trades. So when I say that I lose 40%, I don't lose 40% of my overall account, obviously, you know.
Yeah. Yeah, his
So
yeah.
for people who don't know options, when you trade options as opposed to stocks, the money that you put into an option is the amount at risk. So let's say, for example, you put $2,500 in an option, in some option contract, you could lose it all as opposed to stocks. You know, if you buy $2,500 worth of Apple and Apple falls 4%, you just lose 4% of that $2,500. But when you trade options, you could lose it all. So that's why option traders don't go all in. Usually, I don't know for everybody, but usually.
I haven't traded options for a while, and I never really traded options. I always purchased long-term positions with options.
Okay.
Um, and I realized at one point, because I was doing a lot of vertical put spreads,
Okay.
so essentially a vertical put spread is, without going into all the detail, it's kind of like selling insurance to the market, that if the market falls, then you will pay out. And I realized at one point that my put spreads were so leveraged that if the market fell significantly in some black swan event, I would have been completely wiped out.
Right.
So
Right.
I
Yeah. So
accidentally realized that.
right. Right. So that's the thing with put spread and most option strategies out there in the market. So most of them give you a good um, probability of winning, but the risk versus reward ratio is not so great. So that's something that people have to really watch,
Yes. That's a very good point. I just want to expand on that because that's a terrific point. So if you did a put spread is likely going to win more times than it loses, but you only make maybe 10% of how much you put in, right?
Exactly.
And so that means that you have to win 10 times to double your money. That you lose once, the whole thing's gone. So you have to have a win rate of 10 to 1 as in this particular example. But that's kind of that's kind of the risk of doing options. And expanding further, my own experience in hedge funds and so forth, black swan events are very real, and they happen more often than normalized probability would expect. So when something catastrophic happens in the positive or negative direction, it, it happens. It's going to happen more often than not, and it will mess up your probabilities. So just beware of that, of all of that.
Definitely, definitely. You can also work in your way sometimes. I
Yes.
remember one day, I think I took a trade on, I think it was Hertz, the car company. I think that was the very next day after they announced that they were going to go bankrupt, and I think the stock was going up for whatever reason, and I took, and I took a trade on it, and I bought some calls, and I think at some point I was up 100%, and all of a sudden my account showed 350% up. I was like, oh wow, let me cash it out, right? I think it was a mistake from the black scroll equation.
Probably was. The Black-Scholes equations pretty much sets the prices for options. Pretty much, it's a very straightforward differential equation that talks about how the time decay of the option gets priced into the option as it decays in time and other, variables. But yeah, take advantage of it every single time, Gene.
Exactly. Doesn't happen very often, but when it does, please do.
Oh man. Well, Gene, thank you so much for talking to me today and giving some insight on day trading. I really appreciate it.
Yeah, definitely. It was my pleasure. I wish I could have more.
We should definitely do this again. Let's I think the next time the market starts to go a little wild, we should have just like a quick call and just update us on how you're doing and what's going on.
Definitely looking forward to that.
I'm hoping on that call you're like, yeah, market turmoil. I'm doing terrific. I'm like, yes.
Yes, I've been doing very good this week. I think I hit my weekly goal on Wednesday. So, like I said, yesterday was just for me, just closing some trades.
Yeah.
So right now, I would say I'm 95% cash because of the way the market is going. I'm still bullish, so I'm not gonna go ahead and short this market because, like I said, I don't want to get caught on a rebound. So right now, I'm just 95% cash. The 5% is just allocated to long-term investment, like we do.
Awesome. Well, Gene, thank you so much. I know we spent a lot of time on the psychology of trading, but I think that's very important. And next time you're on the call, we'll need to talk technical details a little bit more so that you can educate people on how to day
Sure,
trade.
sure, sure. I'm looking forward to that.
Gene, thank you very much. Check us out and subscribe to the Stockteamup channel, and appreciate your time. Thank you.
Thank you, Justin.
Awesome.
Oh, really?
To be
Okay. Yeah,
released,
that's fine. That's
we'll
fine.
have time.
Yeah, that's good. I hope we can do another one before you put mine out, so I can we can pick the best one.
We're gonna do both, man. They're both the best one.
Ah, I don't know about the first one, but we'll see.